Okay, let's dive right into this. In this explainer, we are laying out a super clear roadmap for mastering your financial statement analysis group project. Now look, I know it sounds like a lot, but this isn't just some academic hoop to jump through for a grade. We're talking about building actual, real-world investing skills that you're going to use for the rest of your life. Whether you want to invest your own money someday, or you just kind of want to peek behind the curtain to see how major businesses actually run, analyzing financials is absolutely the key. So let's get into it.
Here's our agenda for today. We're going to kick things off with a project overview and background, then move right into sourcing SEC Edgar data and crunching those financial statements. After that, we'll hit interpreting the financial ratios, and we'll wrap the whole thing up with the midterm group peer evaluation.
All right, part 1, project overview and background.
So, before we even think about touching a spreadsheet, we have to establish the foundational story of the firm. Because honestly, you literally cannot understand the numbers if you don't understand the business itself. We start with the qualitative stuff, formally introduce the company, dig into their history, and clearly explain their exact business model. And crucially, you gotta look at the CEO's personality and character. Answering these questions really sets the stage way before you start doing any of the heavy math.
Okay, moving on to Section 2. Sourcing SEC Edgar data.
Now, this is the phase where we go hunt down the official, publicly available financial data. To invest in any publicly traded company, you can pull their annual reports straight from the U.S. Securities and Exchange Commission database using a really simple 4-step procedure. Step 1, go to the SEC EDGAR website. Step 2, search using the company's CIK number or ticker symbol. Step 3, locate their 10K, which, by the way, is just the official term for the annual report. And finally, Step 4, click on Item 8. This is the golden ticket right here. It contains the financial statements and supplementary data, which gives you 3 full years of balance sheets, income statements, and cash flows.
Section 3. Crunching the financial statements.
Once you've got that 10K downloaded, it's time to get into the mechanics of what exactly needs to be calculated. And the good news? You have a very specific roadmap to follow. You basically need to mirror the exact structure of questions 1, 2, 3, and 5 from the Anandam case. Since we already tackled those specific questions back in weeks 5 and 6, they act as your absolute foundational template for this assignment. Basically, if you know how you solved the Anandam case, you know exactly what to do here. Breaking that template down into the exact deliverables, you're going to start by preparing the statement of cash flows. Next up, calculate the common size income statements and common size balance sheets. Actually, quick pro tip on this, since you have a couple of years of data available, running these common size statements for multiple years will always yield much better analytical results. And finally, you're going to wrap this section up by performing a comprehensive trend analysis.
And this brilliantly illustrates how to do that trend analysis. You always take the oldest year, year 1, as your base. Think of that base year as mathematically equaling 100%. Then, to find the trend for the years that follow, you simply divide those newer numbers by that original base year number. It's awesome because it instantly shows you the trajectory of the firm's financials over time.
Up next, Section 4. Interpreting the financial ratios.
Now, this is where we transition from just plugging in math to actually writing out the analysis. Let's be real, anyone can punch numbers into a calculator, but this written section, this is where the real value lies. So before you write a single sentence, I want you to hit a narrative speed bump and ask yourself, what is the data actually telling you? Doing the math isn't the end goal here. You have to explain your findings. You can totally check out resources like Yahoo Finance to see how the pros write up financial analyses and compare it to your own logic. Just, don't copy their answers. Use them as inspiration to practice diagnosing the company yourself.
So the crucial point is knowing the difference between a poor analysis and a great one. A poor analysis just drops raw ratio numbers onto a page and calls it a day. A great analysis goes way further. It explains what those numbers actually mean for the business in the real world. You're basically playing detective to uncover the real business story operating behind the math.
Think back to the Campbell's soup example we talked about in class to perfectly illustrate this. A really strong insight-driven ratio analysis looks exactly like this statement. The inventory turnover ratio shows it takes too long to sell inventory. See the difference? That statement doesn't just parrot a math result, it actually diagnoses a physical operational problem happening right now in the company's warehouses.
Here's another concrete example directly from professor feedback to really drive this home. There are issues in accounts receivable. The company is not collecting cash fast enough. See how that works? You're basically acting as the doctor diagnosing the company's financial health rather than just acting as a human calculator doing arithmetic. You've got to be able to talk intelligently about how the company is actually functioning.
All right,
Moving to our final part, Section 5, Midterm Group Peer Evaluation. This brings us to the final logistical component of the project, which is entirely focused on individual accountability. Look, group work obviously means a shared final product, but make no mistake, individual effort is absolutely still tracked. You'll need to download the midterm evaluation document, punch in your name and your group members' names, and submit that file individually. It's a completely private document where you'll list and evaluate the performance and attitude of your peers.
Now, what's really interesting about this is the rubric scale. When you're evaluating a group member, giving them a 5 means you strongly agree with their positive performance and contribution. On the flip side, giving a lower score means you strongly disagree that they put in the required effort.
And why does this score matter? 30. 30 massive points are on the line for this group work. If someone gets a poor peer evaluation because they lacked effort or just had a bad attitude toward the group, they are not getting those 30 points. Their individual score will take a massive hit compared to the rest of the group. So hey, if you feel like you haven't put enough time into the assignment yet, now is the time to pivot. Change your attitude and grind a bit harder to ensure you earn a solid evaluation.
But listen, don't stress about this causing weird, awkward group dynamics while you're still trying to work together. These evaluation scores remain entirely confidential until after the final project is completely finished. The professor keeps them totally secret to prevent any friction during the remaining work period. You won't see how your members graded you, and they won't see how you graded them until the whole shebang is turned in.
So what does this all mean? Well, it leads us to our final question. Are you ready to analyze a real company's financials like a professional investor? Nailing these steps, understanding the company's background, pulling the right Edgar data, crunching those numbers properly, and thoughtfully interpreting the ratios is literally exactly how the pros decide where to put their capital. It's a challenging project for sure, but an incredibly rewarding one with genuine real-world application. Good luck diving into your chosen firms, and I really hope you uncover some fascinating business stories along the way.